Policy. The number one issue around crypto right now is policy. Number two issue, policy. Number three issue, policy. And I'll tell you why I say that. Let's talk about what you brought up there with Bitcoin miners, because the worst has not yet happened.
Kevin O'Leary is really angry after what happened to FTX, as he was a huge investor in FTX, or you can say he was a shareholder, and many times he has stated in interviews that he trusts FTX more than any exchange. But now he is not going to invest in any crypto unless they become regulated. Also, Kevin believes things are going to get crazier now, and the worst is yet to come. So if you want to hear what are those worst scenarios that Kevin thinks are on their way, then do watch the video until the end and subscribe to our channel, Crypto Money Talk, if you haven't yet.
The crypto market right now is really interesting, and here's why. This is one of the first years where everybody that trades crypto knows they're going to have to report. Let's say you're trading domestically in the US. You're going to have to report your gains or losses. And let's say you're like me and you have a lot of positions on. You've got 32 plus positions. Many of them are way underwater, but I don't want to give up my exposure to crypto. So what's going on my trading desk in our operating company right now is we're looking at every single project we're involved in. We're looking at the loss we could harvest. In other words, if I'm down 70% in helium or something, maybe I take that position, go back to USDC, then trade it into Bitcoin for the next 31 days, because that's the wash period, or 60 days, depending whatever your wash period is based on what your institution compliance says or you individually have to comply to. Because if you're going to do that, you're going to get the tax loss benefit harvested in 2022 and still keep on a position in crypto. Now, here's the debate, because I just before we got on together was talking to my operating trading desk about this. There's an intrinsic assumption right now that Bitcoin is a good proxy for any crypto. It's really hard to see some project moving north of Bitcoin gains if Bitcoin's going to be stuck in a trading range of 19 to 22,000. Now, the assumption I'm making, and I'm giving you a lot of detail here because it's food for thought for everybody that's trying to make this decision over the next 6 weeks. If you're going to harvest your losses, you basically have to December 15th, because things could get thin after that. I'm talking US domestic now. I'm looking at these positions every day and saying, okay, let's take off that Polygon position, or let's trade that Polygon position for the next month into Bitcoin and go through the tax period and then reposition at a new price, a new ACB average cost base, because this is the first year that everybody's worried about the IRS. The IRS didn't give a damn about this 2 years ago. Now they do. Even my own auditors, even our compliance department is saying, Kevin, what are we doing with our crypto portfolios? What's the plan? Let's go through every single position and harvest our tax losses. Now, I don't think Bitcoin's going to trade past $22,000 until we get policy, but it doesn't have to be Bitcoin policy. It has to be any policy, which gets full circle back to what I was talking about with the Stablecoin Transparency Act. Give me that policy. I want to be long Bitcoin when that hits, if it gets cleared into law, and Katie bar the doors, because institutions are going to smell the same thing. And the asset that they want, if you could pick, let's say, 4 positions, I'll tell you what they would be in my view from an institutional client. It would be Bitcoin, it would be Ethereum, it would be Polygon, and USDC as a payment system. You could get full exposure to the volatility of crypto with just those 4 positions, with the stability of your payment system being USDC. And I think that's what's going to happen. You're going to see a rise in those positions almost immediately. It doesn't mean Solana's not good. It doesn't mean there's other projects you shouldn't own. But if you want just a core holding into legislation, I'd recommend those 4. Policy. The number one issue around crypto right now is policy. Number two issue, policy. Number three issue, policy. And I'll tell you why I say that. I represent and am very close to the indexing markets. I do indexes for sovereign wealth, pension, hedge funds, universities, endowments, all that. Let's say you're a very oil wealthy emirate in the United Arab Emirates and you make 250 million US dollars a day. That's not uncommon. Where do you put it? You put it into the S&P, X oil stocks, X airlines, because you already own those. And so indexers like me make those indices. When I talk to those people about what they're going to do in crypto, they would love to index 1 to 3%. I ask them, well, what would you want in that? They say, we'll just do Bitcoin. It's so correlated to all projects. We'll just do 1 to 3% in Bitcoin. They don't own any yet. None. Zero. For all the excitement about crypto, the real money, where 70% of the world's wealth is tied up in sovereign wealth and pension plans, owns zero crypto. If they could get their hands on it, they would buy Bitcoin, which is why it's so interesting. The Canadians have an ETF where the underlying is Bitcoin. They also have an ETF where the underlying is Ethereum. But the institutions won't buy it because their compliance departments do not allow them to own it because there's no policy in the US. So my whole investment thesis here is you go long Bitcoin and you wait, because you either have to do it after this policy, in which case you probably leaves 20 to 30% price appreciation on the table, or you go in now and you simply wait. But I'm telling you, you're not going to get past 22,000. It's going to be stuck in this range for quite a while until we get policy. Let's talk about what you brought up there with Bitcoin miners, because the worst has not yet happened. Many of these miners got into contracts where they couldn't fund the purchase of stacks, machines. And so what they did when Bitcoin was up at $25,000 to $30,000 is agreed with contracts saying, if you lend me the machines, I'll pay you back on the awards with a floor of $25,000 or a floor of $27,000. Guaranteeing a Bitcoin price is an idiot manager. And so what happened there was now they're sitting with these contracts, they've got the stacks, they're being awarded coins, but they have to give them up at a price that's 20, 30, 40% higher than what Bitcoin's trading at. So they're effectively, every time they get awarded, on their way to bankruptcy. So you're going to see a lot of this happen, a lot of machines coming on the market. The prices have come way down on Bitmains and everything else. And we've got to flush out the idiot managers out of mining as well. And the other problem you got with mining is Larry Fink and the ESG mandates around just tying miners to the grid. You got to have hydroelectricity behind the grid, hydroelectricity or nuclear power. Those are the two that get you away from basically buying carbon credits. Everybody knows that carbon credits are bullshit, and the SEC is chasing that and forcing you, and they want in their latest memo. You can look at exactly what happened to the prices of Bitcoin miners that were public in the US stock exchanges the minute the SEC memo came out saying, we're going to get you to sign your carbon credit audits. No auditor is ever going to sign something that says, oh, this Bitcoin miner bought 5 acres of the Amazon jungle and they're no longer, and now they're carbon neutral. Everybody knows that's complete BS. And so you can't get anybody to sign that. That carbon credit market is screwed. And so at the end of the day, if you're going to mine Bitcoin, you better find a place where you've got power that has nothing to do with emitting carbon.
So that's what Kevin thinks are going to be the impacts of FTX collapsing, and the only thing which will save crypto now to appeal big investors are regulations and policies. What do you guys think of the situation now? Are you still going to invest without regulations, or are you going to wait for them? Do let us know your views in the comment box below. Now, if you found the content helpful, then don't forget to give this video a thumbs up and do subscribe to the channel for more content like this. Thanks for watching, and see you in the next video. Until then, goodbye.